All right. So when you gain liquidity, when they gain liquidity, so first thing, a lot of people will look at this when the pair got right here and try to sell it. All right. So what I mean by that is, when they looked at it like this, they saw it come up here to this. They saw it form this long wick. They would have been like, oh, okay, I'm about to sell this, right? So they could have put it right here. And so most people, when they get into a trade, when they get into a trade, they usually put their stop loss above the, the resistance that they're looking at and so forth. Um, and they'll put like their TP at the next support on the sell. So it'll basically look like this, right? They're trying to sell it to right here. I'm gonna do this. Right. They were trying to sell it, and they were like, all right, cool. From this blue, it's gonna drop all the way down here. This is my stop loss, right? What the banks will do is they'll bring price. I'm gonna delete this. They'll bring price up to this point before they actually make it drop. That's them gaining liquidity. So from a visual standpoint, instead of selling it right here all the way, they will bring it here and make it come to here before selling it, right? At that point, they're gaining liquidity and they're getting all of the sellers out of the market, right? Banks don't want to sell when everybody else is selling. They want to sell when everybody else is buying. They don't want to buy when everybody's buying. They want to buy when everybody is selling. All right. So if you look, so if you look, um, they brought it right up to here. It hit a lot of people's stop loss, and then it dropped right to the TP. Y'all see that, right? And what that means is they're taking a lot of the sellers out of the market before they actually make the move. So what these areas are called are supply and demand zones. So the zones where banks make price go to before they sell it is called a supply zone, right? It's called a supply zone. So if you look right here, I can basically mark one up. So when I mark up my supply zones, I basically put them in areas where you see um big impulse moves like this, big impulse moves like this, right? Where you see price come to this area a lot of times and then make its move. So right here it could be a supply zone, right? So I can assume that when price gets back up here one more time, what is it gonna do? What do y'all think price is about to do right now? Buy or sell? Just by looking at this,
So
right? And it could potentially come up to here before it sells, or it could come all the way up to here before it sells. Y'all see, it's a reason why it's not really too much. Like this isn't a good example, but like right here and right here, it's the reason why it's a wick instead of a body. Can everybody mute their phones back for me, family, please? That's why it's a wick right here and not the body of the candle. If y'all don't understand the wicks and the bodies, please download Japanese candlestick patterns because I could talk about candles all day, but I'm gonna stick to the list. All right, Japanese candlestick patterns, and y'all can go on Google and download the Candlestick Bible. It's everywhere. It's for free. All right. So if you look, bow came up to here again. That means if when it's wicks like that, that means that it's exhaustion, right? If you see a long wick like that coming up to a certain point and no body of the candle, that just means that uh the buyers were trying to gain control, but the sellers still gain control. Or if it was a long wick low like this one right here, sellers were trying to gain control, but the buyers took over and went up, right? So that's one example. Somebody put in the chat based on, let me see if y'all are listening. Is this a demand or a supply zone? This one right here. Put it in the chat. Right. 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 Supply zone. All right. Now let's look for another one. I could have sworn I had one. Hold on, y'all. I'm gonna look for it. I guess I can do this one. All right, cool. So that's the supply. Now let's do another one. Let's do a different color for this one. All right. What type of zone would this be? What type of zone would this be? This is really blowing me that these chat boxes not popping up. Yeah, it'd be a demand zone because prices coming to this point a lot. I'll screw it up. But we can use that one for it. Look, this is where it all started. Long wick, bow. And you can see every time it came to this point, it came to the bottom and bought off. Every time. There were some times where it broke through, but all it did was retest and come back up. Just like this. When price breaks through a support or resistance, what is it gonna do next? Every time. When price breaks through a support or resistance, what is it gonna do? Retest. Got some students in here, yes sir. Actually, these are teachers. They teaching y'all. They giving y'all the answers. I don't even have to do it, right? These are areas where price came to and went back up, or it retested once off uh this support and it came up every time. So I can assume by what price has been doing that it's probably gonna come up here before it drops, or it might break through. It just might break through. It does sometimes. But anytime price breaks through a supply demand zone, it's going to be big candles like this. Anytime. Not out of it like how it's supposed to, but say that it went through, it has to be long candles. The reason why it has to be long candles through these is because only banks are capable of forcing candles through supply and demand zones. Supply and demand zones are so strong that banks are they really are the big move for most things, but they're the only ones that can, like, the people who work there who control the market, they literally sit there and be like, okay, we have to make price breakthrough here. So they're gonna do big, huge candles like this. A lot of times they use news for an example. I'm pretty sure looking at this was news. But then again, GBP does move like that some nights. GBP would dead move like 100 pips straight some nights. So I can't even say that. But when you see price break through these super crazy, it's usually because of that. All right. I can try to find one more. Damn, I'm still doing this. Um, I'll put this. Um, cool. Found another. Use this as an area because people might think that when it gets to here, right? It's the reason like when it gets to here, people will sell. They'll be like, oh look, wicks like that. And they'll sell off of this resistance, right? This is the resistance that they were sold off of, right? Perfect, right? Everything makes sense. Why wouldn't you sell this? Bow, it came up to here, wicks, pressing through. But you got the banks, brought the price up to here, then made this move, right? And these aren't baby moves, right? These aren't
Hey,
baby.
fam, I got a question.
I got an answer.
All right, so when you join your supply and demand zones, do you drop from like the breakout candles and then stretch it to the right?
Yeah, I'll
Okay.
find. You usually just zoom out and find areas where you see a bunch of breakout candles like this. So that's how.
All right.
And so if you mark up the supply areas, enough of them. Say I mark one up like all the way back here or something. I could just spread it over and be like, okay, because when you mark up charts, You want to mark it up on the higher time frames and come down lower. It's called top down analysis. But when you do it, you don't want to. Oh yeah, this is definitely a sale. Definitely. GBP selling this week for sure. So if you look, well, the rest of the week on Wednesdays they usually reverse, so they probably gonna it's gonna buy tonight before it continues to sell. But it'll probably buy up to this supply zone and sell off. The reason why I say that is because I see a big break and retest. I'm big on break and retest because almost 100% of the time they work. Right? I saw price come through here, come back up and retest. It's just a break and retest on a higher time frame, a higher scale. Um, and then I know. So what I was going back to saying is when you mark up your charts, you can just stay in the area that you're looking at. You don't have to zoom crazy out and do all of this. Like focus on what you're doing because whatever you mark up over here or in this area is gonna be the same for what you're looking at. So I'll mark that up. But I'll go to the 4 hour. Um, let's just see what else I can mark up. It's not much. Put one right here. Put one right here. Wow, now price is way more structured. Um, you want to make sure that you have support and resistance to the point where um I do a lot of calls, yeah. Support and resistance to the point where price is just bouncing off of these lines all day long, or it's breaking and retesting. If you look at my charts, um, if you look at my lines and everything like that, you can see that price is either bouncing off of a line or it's breaking and retesting. So let's just check it out. Look, bounce up, top, bottom, top. Long candles, right? Long candles. Broke through this one, came back, retested, dropped through here, retested, dropped to here, retested, dropped down, down again, retested, came back up. Like price is super structured at this point. Super structured. Drop a one if you see the structure in this chart right now. If you see the structure in this chart right now, drop a one. If you want, that's fine. Yeah, I'm recording it, bro. It's not necessarily top or bottom. Supply, sell, demand, buy. That's how I do it. Market like this. Supply is where you're selling. This is the zone you sell from. Demand is the one you buy from. Yeah, that is there a chat. I'm going in order, y'all. I got y'all. I'm gonna answer everything. Um, I got this little list. So yeah, so now I can go to the smaller time frames, about 2 hour. I can mark up whatever ones I see on here. Cool. I can put one more right here. I hope y'all paying attention to why I'm doing these. Look, came up to here. This is the point where it bounced off right here. To the point where it's bouncing off over here. It's literally bouncing off this line right here. The same one I put over here is bouncing off of it right now, trying not to break through it. Right. And usually when you mark these up, you want to do different color lines for each time frame. So if I'm on a daily, I might do red, 4 hour green, 2 hour blue. And then you want to do the finishing touches on a 1 hour chart. My bad, let me check the chat. Um, a lot of the questions that y'all are asking are y'all assuming things. I really don't like when people make it like super complicated because you're complicating things for yourself. You really should just retain the information that I'm giving you without thinking, oh, so that means this and that. Like, just take what I'm giving you, and then it'll make it so you're not all over the place. Like, um, giving you a concise amount of information. Not to go on you, bro, because all questions are good, but just don't confuse yourself because a lot of the questions are confusing even to me. All right. So you go to the hour time frame. and you just make the finishing touches based on the area that you're on, right? So I have everything else marked up. Now I want to focus on the area I'm on and mark up that area so I can see exactly what's gonna happen next. I'll use light blue. I really see that price is already coming here and it's probably about to sell. So like it's probably about to sell to here. To be honest, how many pips is that? Like 30. Yeah, 30 pips. And then you'll see what happens next. So I'm about to tell y'all how to find the entries and stuff, but when you get to the 1 hour, you just want to see, put the finishing touches on everything. I really marked this up beautifully. I'm not gonna lie. I can pull one right here, put it because of this. Um, I really don't even need that. I'm gonna delete that. I'm gonna leave it at this. Uh, please, thank you so much. Thank you, thank you, thank you, thank you, thank you, thank you so much. Um, I appreciate it. Um, y'all know I was gonna spaz. All right, yeah. So you just want to come to the hour chart, and then you want to try to see what's going on. So can somebody take their mic off of mute and tell me what's going on right now? This is just like I see everything I need. Now tell me what's going on right now.
It's retesting.
Uh, mm, Not really, because in order for it to retest, it would have to. I see what you're looking at, but in order for it to retest, it would basically be having to come down like this, and then it would have to broke this, and then retest it. But I do see what you're saying, but that's not a retest.
So saying that line of resistance.
Yeah, and does price action in the wicks and candles show you that it's about to make a move up or down? What are the wicks telling you, right? When you see long, remember when you see long wicks rejecting a certain area, it's a good thing, right? You see wicks rejecting this and come back down, that's a good thing. I saw a wick reject off the exact area that I marked up back there, right? And then I see a red candle forming, a selling candle, right? What does it mean when you're waiting on the candles to tell you which way it's gonna go? What does that mean? What is the word for that? Gotta go to the chat. Price action. No, price action. Price action. When you're waiting for the candles to tell you what it's gonna do, the candles telling you which way it's gonna go is called price action. So that goes for wicks showing you rejection in a certain area to say that it's gonna go a certain way, or it's a candles forming a certain pattern and things like that. Looking at this, I know evening stars have there. These are evening stars. I'll show you. Evening stars are basically where you have I don't know. Usually when you have evening stars, it's usually a long bullish one, and then a doji, which is basically like a plus, right? And then a bearish engulfing. All of these terms, all you gotta do is just study, look up forex pairs, patterns, candle patterns, look up the app that I was telling y'all, everything like that. So I know that one, it's rejecting this ceiling first, and this looks like it's forming a doji. All right, looks like it's forming a doji where we're almost to 12 o'clock. We're almost through this next hour. So it's telling me that this candle is about to close within 17 minutes. So it's probably not going to do much else. So if I have a bullish and then a doji, I can say that, oh man, it's probably about to form an evening star.
So
So
that's where you would look for your reversals right here.
say that again.
You would look for your reversals right here
Yeah,
because you're
you
coming off a major level of resistance. And then also like you got candlestick patterns giving you another confirmation for entry.
Exactly.
Say less.
Exactly. So the way that you find entries is waiting for it to be on support or resistance. First off, that's the first step. You wait for price to be at support or resistance. You don't trade in the middle of zone. You don't know where it's gonna go. It's in the middle. How do you know it's where it's gonna go? So you wait for it to get on support or resistance that you have marked up before. And once it gets there, you wait for price action to tell you where it's gonna go next. Right? You wait for price action to say, oh, it just formed a reversal selling pattern, like an even star. That means I could probably get in for the trade. I got a rejection off resistance, and I got an even star with a bearish engulfing. Oh, cool. It's probably gonna sell here at least. If you know that it's selling off of here, you know that it's at least gonna come to here. Then you wait. Once it gets to here, you wait for price action again, because it's two things that it's gonna do right now. It's either gonna bounce off that support and come back to the top, or it's gonna break and retest. All right, every time. When price gets to support or resistance, it's gonna bounce off or break and retest. Same for this. This might bounce off. Mute your phones back for me, please. It's gonna bounce off, or it's gonna break and retest. The way that you know it's gonna break and retest is you wait for it to show you that. If it doesn't, if I'm on support and it shows me no indication that it's gonna buy, no, none at all, no patterns of wick exhaust or nothing like that, you're not getting into a buy. Why are you getting into a buy just because it's on support? You want to wait for it to tell you, okay, yeah, that's confirmation. You need to get to that buy, or you wait for the candle to break through that support. Then you wait for it to retest, and then you wait for it to get in and bow. You got to trade. I know y'all asking questions, so let me check. So if you can, sometimes I just know what pattern's about to form and I don't wait for it. But that comes with practice. You should always wait for it. Long candles are good. What is the short candles? Make sure you download Japanese candlestick patterns. Yeah, thank you. Um, let's not about to get you where it most overall. I'm just. Can you take your mic off mute and ask this one for me? Or if somebody understands what she means, can you ask? Can you ask me? It's a little confusing. Don't be scared to take your mic off mute though. Questions are good. If not, then I can't answer. No. All right. What's next? Drop a one if you drop a with you if you with me so far. If you learning something, drop a with you if you learning something. I hope we get at least 50. Um, re-entry. Cool. All right, I did support and resistance. I did supply and demand. Basically, to hit back over support and resistance real quick. Um, you just want to make them where it's a bunch of areas bouncing off of it, right? If you're looking at the overall scheme of your trade, you just want to put them where prices. You just want to look where price is bouncing off a lot of times. Like I could just visually see like, wow, cool, bounced off of here a bunch, came up to here again, didn't reach, came up again, came up again. Oh, I could pull one right there. And once you really get the practice and hang of it, like you have to mark up charts. You have to get off your phone and you have to get on the computer and do it. It took me like 2 months to actually finally start using the computer. That's what set me back. When I started using the computer, I'm like, whoa, I can see everything way much clearer now. Like it's all making way more sense to me. It's all making way more sense to me. Please keep your mics muted. I know a lot of times it's not on purpose, but just be careful. By bouncing, do you mean reversing type? That's weird. By bouncing, I mean if you throw a ball off of a floor, what is it gonna do? Bounce off, right? You throw a ball off the ceiling, what's it gonna do? Bounce off, right? Yeah, that's reversing. It's the same thing. But like I say, you're like basically making it more complicated. Bouncing and reversing is the same thing. Um, Good question though. So what's next? Bro. Re-entry. Come on, man, hurry up. All right. I'll do my top-down analysis from the day. I'll check gold in a second. No, this chat is. I'm going over all that. I got you. Yeah, I'll start with the day chart. All right. Re-entries. Re-entries. So, like Jermaine was saying, I'm pretty sure that was Jermaine. Hold on. Uh, my bad. I got OCD bad. So say you're in a trade, right? Let's just say it goes right here. Not what I put. Let's say that it's right here. It breaks. Say this is your entry. Now you got in on a break and retest, and you got in right here, right? And you saying that it's say that it came to right here. All right. Say it came to right there. Like he was saying, a lot of times when people execute a trailing stop, you don't know. I'll explain what a trailing stop is right now. So say he got in a trade right here. Once you're in profit 15 to 20 pips, you can move your stop loss to where you got into the trade. You don't physically move it. You modify your stop loss for that pair in that trade to modify your stop loss to the entry point. Your entry point is gonna be the number right under the pair. So if you're in a GBP JPY trade, let's say GBP JPY sell 0.01. The number right under GBP JPY is your entry. Then it's gonna have an arrow pointing at the number that's current, which is gonna be fluctuating. All right. So say you're 20 pips in profit. Look what it's doing. I'm not playing. Look, if you get in that trade and it's 20 pips in profit, then you can change your stop loss to where you got in while the trade is right here. What that does is if the trade reverses at that point, it'll hit your break even and you won't lose anything. All right. You won't lose anything. And another thing that you can do after you move your stop loss to your entry point is take partial profits. So you'll make something regardless. You won't just break even. If you're in the trade for zero point 0.1, which is $1 per pip, you can go to close and you can close partials. You can do 0.05 instead of zero point 0.1. And if you're up $20, it'll take $10 of that profit and leave the other 10 in. So now if it reverses value, you make that 10 no matter what, and you hit break even, so you didn't lose on that trade. All right, this makes it real like cool. I promise I just said it like 3 times. Can somebody put it in the chat? I really just said it like a bunch of times. Thank you. Yeah, so make sure you're doing that. And so once it gets even more and more in profit, you can then move your stop loss in actual profit, right? You can move it to actual profit. So at that point, you're gonna make money when that stop loss gets hit, no matter what. So if this was your entry, You can move your stop loss. Say you're up 30 pips. You can move your stop loss up 15 pips. So then if that stop loss gets hit 15 pips in profit, you made that 15 pips profit no matter what. And you probably already took partials. So it makes it cool, right? Um, yeah, so it makes it cool for you. So that's how you utilize trailing stop and re. And when you want to re-enter, I'm gonna be honest with y'all. Beginners, please just do TP1. At most, do TP1, TP2, and leave it at that. Just get used to what the market is doing. Get used to what the market is doing when it hits the trailing stop, or when it hits the stop loss, or when it hits the take profit, or anything like that. Actually, look at the chart, right? When you all get a chart, when you get a signal, what is the first thing you should do? Put it in the chat. When you get a signal, what is the first thing that you should do? What is the first thing you should do? Yeah, y'all know I was testing y'all. Oh, Jermaine took it there. Okay, I like that one. I like that one. Look at the news first.
Check the news.
I like that. I like that. Cause I be forgetting to do that sometimes. Put it in my system. Woo. Check the chart. Check news. Check high time frames. Yes, sir. Hey, my boy been in a week. Locked in. You got Kenzo though. That's wild. Kenzo a real trader. All right. So check. Good shit, Jerem, and everybody else who said something. So yeah, first thing you should be doing is checking the chart. If you're just going straight to the trade and putting it in, you'll never learn why you're getting into a trade. You'll never learn why you lost a trade or why you won a trade. A lot of people want to be independent traders, but asking questions that you can simply Google and find the answer to. A lot of people would rather have things fed to them. As soon as they have a question in their brain, they think to go in the chat instead of trying to find it yourself. The chat is for questions that you just maybe don't have the time to look for at the moment. When in reality, if you typed it in the chat, you could type the question in Google. But it's another story for another day. But yeah, um, like I said, the family, your mentor is literally gonna be the person who leads you in the right way, right? I'm the person at Walmart that when you want to know where a certain thing is, I'm gonna tell you which aisle to go to, which shelf to look on, which side to look at. I'm not gonna be the one that holds your hand and walks you to that aisle, right? You should want to get the information and not get spoon fed the information. Y'all know I use this all the time. It's a very good analogy if you ask me. All right, so yeah, make sure that you're trying to be self-sufficient. So re-entries with those things, I don't put a TP on my trades, right? I don't put a TP on my trades because I've had a lot of practice with understanding what's going on in the markets and knowing what's going to happen next. And I use my trailing stops, right? I don't limit myself to a 20 pip TP because I've had a lot of practice. Y'all should understand that when I'm saying these little slick things, that means do not do it until you have a lot of practice. Do not do it until you really understand what's going on, until you understand market structure, which is something else I'll go over. But y'all shouldn't do it until you know these things. Then you can put open TPs and then use trailer stops, and instead of getting 20 pips, trying to find a million 20 pip moves, you got two moves I just won 150 pips because you held them and you added positions along the way. Instead of getting in one trade, it closed. Now you're trying to scramble and figure out how to get in again. All right. I know that was a gem. I know it was. I know a lot of y'all do that. And you get mad when you can't find your re-entry. All right. If you've been doing this for a minute, you should be able to hold one trade for a long amount of time. If anybody knows, like me in trading, they know I can hold a trade for days in real life. All right. And y'all should be able to do the same thing. People want to know, how do you build small accounts? I'm not looking, I'm not in the $50 account trying to find 20 trades that go for 10, 15 pips. I'm doing a point zero 0.05. That's over leveraging with a $50 account first off. But I might do a point zero 0.05 and catch 200 pips. I just made $100 from one trade instead of using point zero 0.02, point zero 0.03 and trying to find a bunch of 20 pip moves that's only making me $10 each, right? makes it harder for you, and I don't put my TPs on my stuff. So yeah. What's next? Y'all gotta give me a second. It's hot. I'm turning my AC on. Give me like literally 10 seconds. Alright. Fibs. Fibs. Let's go to. Gotta get my chairman check first. They getting up though for sure. Um, so when I use the Fibonacci, I usually do the 4-hour time frame. Um, that's what I'm looking for because you want to find the bigger moves. Like I said, the more pips you want, you use the higher time frames. It's no difference in trading. Like scalping and swinging is no difference. It's just you're using the higher time frame. None of the concepts are really any different, anything like that. You're just holding trades longer and you're finding bigger moves. Instead of me going on a 15-minute time frame and I see a move that can go 10 pips, I might go to the daily and see a move, bow, double top. I might see a move that goes down here, right? That's how many pips is this? 150 pips, right? There's no difference. I low key like that, but I ain't gonna call it. So when you use the Fibonacci is basically a tool to indicate when something is gonna reverse, right? So usually you want to use it on big impulse candles and big impulse moves like this, right? The reason why is say you have a big move like this. You know that it's gonna reverse at some point. So once you see price start to show indications of a reversal, then you can use the Fibonacci and see how far back exactly it will pull back before it continues in the direction that it's gonna go. So I'm gonna pull the fib out so y'all understand what I'm saying. All right. So if you're looking at a sell impulse move and you're trying to figure out when it'll pull back to, you start from the top and go to the bottom. Y'all's is gonna look like this. I'm not about to change my stuff because it be tweaking, but it's usually gonna be full, like, and it's gonna be different colors. It's gonna be full like this. So what you're looking at are basically the percentages of the total move, right? So from the top of here to the bottom of here is obviously, well, first off, yeah, I'm gonna continue. From the top of this move to the bottom of the move is obviously 100% of the move, right? You're saying the Fibonacci is saying that it's either going to pull back 23% of the move before continuing, it'll pull back 38% of the move before continuing, 50, 61.8, or 78, or it might pull all the way back to 100. All right, these right here are called PRZs. PRZs. These are price reversal zones. Price reversal zones. All right. So they're basically saying that these zones are where price usually comes back to before dropping in the direction that it's going. All right. The most important and most used PRZs are the 38 and the 618. All right. The 38 and the 618. Please know that it's usually always going to at least come to the 38. All right. It's gonna at least come to the 23, but it's usually gonna shoot past the 23. Right. 23 is pretty weak. It's usually gonna pull back to at least the 38. The 38 is my favorite one. 38 is my favorite area where price reverses off of. And the next most popular one, this one is used more than anything though, is the 618. All right, the 618. So when price gets to these points, You want to wait for price action to tell you where it's gonna go, because these are basically like support and resistance too. When it gets to these points, it's gonna be treated as a support and resistance, and then you want to wait for price action to tell you, oh yeah, it just hit this 38. You might have a long wick hit off of it, and then you might drop, right? And understand that the shorter the pullback, like anything under the 50, when it hits these points, it's gonna shoot down, right? It's gonna hit these and it's gonna make us move down fast. The higher it pullbacks, the longer it's gonna take for it to drop, right? This might come to here and drop to here in 2 hours, but it might come to here and drop to here in six. Um, I'm gonna check gold in a second. So yeah, that's exactly how the Fibonacci works. It's not much more to it. So we can go to our stuff and try to find an example of one. I really wish I could like scroll over and copy a whole thing. So I don't gotta do this. Yes, sir. All right. So let's try to find one. All right, let's use this one. Let's see if it works. I'm gonna delete this for the time being. So when you do it, you want to look at the total move. You want to look at the move that you're looking at. I'm looking at this one. All right, trying to see how far back it's gonna pull before it continues going down. So what you want to do, you can play with it a little bit, but it's all subjective. It's gonna change, but you can play with it, move it around a little bit. But mostly you want to start from the top wick of the move to the bottom wick of the move. Um, so I'm gonna do it right here. I'm gonna do this move right here. I'm gonna do it to this wick, because that's basically where it started pulling back. I don't really like this one. I'm gonna do it to this one. Um, so say I put it from right here, because we don't see any of this yet, right? Uh, we just see this. We see that it came to here and it's probably about to pull back. So if you look, I did it from the bottom of the wick to the top of this wick. If you look, it came up to this 38. It's a little off, but it came to this 38 before it dropped. Pulled back up again, came to 38, dropped. Right? Um, that's one example. Let's look for another one. We can do this one too. All right, this one's a little off, but it's basically showing the same thing. It came up to here. It had wick rejection around the 618, and then it dropped. Right? How many pips is that? 70 pips. Just off you catching the move off the fib. And you have to use the fib with like anything else. You have to wait for price action to show you that it's gonna actually bounce off of that fib. All right. Drop a fib if you just learned something new about the fib. You just learned some new information. Drop fib. Y'all might be a little confused, but it's all gonna take practice. Like you're just gonna have to keep practicing. The more you actually take a fib to a chart, that's when you'll fully understand what you're doing. All right, that's when you'll fully understand it. Look, from the bottom of this move to the top of this move, came back to the 38. That should be scary to y'all. Bounced right off the 38, went up, bow. Simple, very simple. How do we? So how do we stop loss? You're you're not setting the fib is not for a stop loss. Um, I'll show y'all how to play stop losses and take profit, but that doesn't have anything to do with it, my brother. Please delete that. I'm gonna drop it. All right, so gaps. Gaps are basically areas where, all right, so you obviously, somebody put in the chat, when is the market open? What time is the market open? My stuff must be lagging. 5 Eastern on Friday, 5 Eastern on Sunday, right? So during that time, what is the fancy name for news that affects trades? What is the fancy name for that card? What kind of analysis? For news. Using news to find trades. What's the word? Fundamental, right? Fundamental analysis. Fundamental stuff happens over the weekend. But obviously the market is closed and new candles can't form to make up for the effect in the currency based on fundamentals that happen. Right. So if something happens with Trump and the yen, because you talk about the tariffs and everything like that, it might mess up during the weekend and change a lot. So what happens is, since candles can't form during the weekend, Sunday it pops up at a different price because of that effect from the fundamentals analysis. And so that's why you have gaps. That's why you have gaps. Anytime you see a gap, at least 50% of it has to get filled. Usually it's 100, but at least 50% of this has to get filled, right? So since we say the market open, by the market open right here, if you're in a buy, I'm closing that buy. I'm getting into a sell because this gap has to be filled. Usually right after the market opens, if it's a gap, it's gonna immediately close. So if you look, went right back to closing. This one, it took a little while longer to close, but it literally came back to fill this gap before going back where it was going. All right, that's gaps. Now gaps don't have to be just like a gap like that. It could be a gap from a long move and stuff like that. So you see this move right here, it formed a gap right here. There was nothing here. Like none of this was here, obviously, but it formed this big gap, and it was nothing between this. It was stuff all up here, obviously, because of all of this, but it was nothing right here. So when it made this move, it had to come back up and fill this gap, and then it formed this one. So it came and filled that one, came back down, etc. All right. So those are gaps. Those are gaps. What else do we have? I got a list, y'all. I'm gonna go through the list first, and if I miss something at the end, then we'll go over it. Um, let's see. Swing trade. Yeah, swing trades are the same thing as regular things. As regular trades, you just have to find them on like daily time frames and 4 hours and stuff like that. Went over field, went over re-entry. In terms of what pair you want to look at, if you look on Google, I know I use Google a lot, but literally, if you use Google, it'll tell you what pairs move the most, when they move the most, how much they move, like what are good beginner pairs, what are slow moving pairs, what are fast moving pairs. It's all about what you want, what you're looking for. Pairs also move better at different times. GBPs move way better during London session than any other session, which is 2 o'clock in the morning and like 8. So GBPs, if you stay up that late, you want to catch big moves, use GBP pairs. I love GN. If GBP is moving, best believe GN is gonna move. This right here. I mean, this is it. 434 pips. That's wild, bro. 434 pips in 4 hours. No other pairs are doing that. All right. So you want to find moves. Y'all see my stuff be marked up. It's probably gonna drop to here. The gap right here has to be filled, etc. etc. All right. So yeah. Okay. What am I looking at? Twin trading. In terms of twin trading, all twin trading is making sure you don't put all your eggs in one basket. So it's nothing I can show you about that on here, but if you're in a trade, say you're up 30 pips and then you see a retest on that big move and that'll show that it's going to continue in that direction. Bow, do a little another position on a retest. Bow, now you good. It's all about making sure you don't put point fives on one trade and make sure all your eggs in one basket. Instead, you can do like 2.2s in a point one or something. You know what I mean? You can close out one of them in profit, take some, leave you some with some margin room, and everything like that. So it's pretty cool. Um, now we can go over a retest. Retest is very, very simple. Very simple. Whenever price comes to a support or resistance, it's going to either bounce off or break through. So use these grids as example. Like bounce off, and it comes up to it again and breaks through, and then it'll bounce off and retest. Then it comes up to this one. If it breaks through, it'll retest. If it comes back down and breaks through this one, it has to retest. You look right here, price came to here, bounced off first time. Then what it do the second time? It broke through, but then it retested. Then it broke through again, but then it retested and bounced off. It's gonna retest every time. Let me scoot this one up to give you an example. Like this right here is retest. It broke through here and retested it before it continued in this direction. Alright? It's always gonna retest every time. Alright? So make sure you're paying attention. If you're looking for smaller moves, you want to find a retest on like the hour chart. Usually you want to find a retest on like the hour chart. Because you might not see it on the 4 hour, but it'll be very evident on the 1 hour. So just know that price is gonna come to a support or resistance, it's gonna bounce off or retest. It's very simple. That's all trading is. Don't make it too complicated. Um, I can go over market structure for y'all. Drop a one if you need help with market structure. If you don't really know what you're looking at with market structure. You right, crazy. Only 5 people. That's cap. Super duper cap. Super duper cap. But I'm gonna go over it anyway. Um, so market structure is all about higher highs and higher lows. So when you're looking at an uptrend, all this is doing. This is doing resistance, retest, soft support, break the resistance, hit the next one, and retest. Damn, my mouse just lagged. My fault. That was so cool. So y'all need to understand that. Ooh, this call is dropping just so many gems. But y'all shouldn't really be confused about trading after this. I'm gonna be honest. Y'all should be able to teach all these people, a lot of people, everything on this call. All right. Put in the chat what an uptrend consists of. Put it in the chat. Cool. Higher highs and higher lows. Oh, my keyboard is ripping. Alright. Oh, that's why. Alright. This is our first high. Then we have a higher high. And then a higher high. Alright. these highs have to be higher than everything previously. It has to be higher than the last high and higher than the last low. All right. Then we have higher lows. All right. This is our first low. Our next low has to be higher than the last one, but still lower than the high. That's why it's a low, right? The next one is gonna be higher than the last low, but still lower than the high. All right. Very, very simple. Now, when you're understanding market structure, this is how you understand when big reversals are gonna be coming. When you're in an uptrend and you're trying to understand the trend lines, this is all trend lines is. This is all trend lines is. This isn't the best visual example. This is all trend lines is. It's price bouncing off these trend lines. Trend lines are diagonal support and resistance, right? It's all the trend line is. And when you see bounces off of a trend line, you should be looking for a buy all the time. Well, the bottom of the trend line, and you're in an uptrend. You see price come back to the trend line on the uptrend, and then show a reason for you to continue to get into a buy. Those are the big moves. You follow the trend, you're gonna be set forever, right? Um, I don't like to do trend lines a lot, really only because I'm OCD, and if it's not like real life parallel, then I'll just delete it because I can visually see it without the lines. Like you should be able to just do this so much you can visually see the stuff without the lines. But while you're working, trying to figure out everything, use these lines. All right, I'm gonna delete this one. All right, so the way that you would know when you're getting a reversal because of market structure, a lot of times people trip like, oh my God, the trade is gonna reverse on me. I don't know what I'm doing. Like I need to get out of this trade right now, right? What you need to be paying attention to is what market structure is telling you, right? So if you're in a buy, right? Say you're in a buy and your entry was right here, right? You up this profit, you up $30. Now you only up 15. And you like, oh, it just reversed so hard. I know it's about to drop, right? Until your low is broken, till your last low or last two lows are broken, you shouldn't be worried about a reversal. You be honest. If you're looking at an uptrend and your lows aren't broken, and you're still in this uptrend, like say, say it came right here. Say it broke through, right? Oops. Ah, that word. All right, look. So you say it came right here, and it retested this trend line. Say it was dropping right here, and you're like, oh man, it's definitely about to reverse. I'm not panicking until this low is broken. Unless this low is broken and price retested the low, I'm not getting out of that buy because the uptrend is not broken yet. But this is an indication that it's gonna reverse. If it breaks out of that trend line and retest, you want to be paying attention very closely. But do not get scared because they will fake you out. You wait for price action because instead of it dropping off that retest, it can simply just come right back in this trend line and create a new high and bounce off of there and then continue. All right. You want to be very, very wary of these lows and these highs. And you want to make sure that you're paying attention to them and actually not getting spooked or faked out. All right. So let me delete this real quick. One more thing in terms of reversals. I'm gonna delete this trend line. So say this is your entry point, right? The first indication of a reversal for an uptrend is this high not being broken, right? Your high is not broken, and you're like, oh man, it might just reverse because your high isn't broken, right? I mean, your high, it didn't create a new high. So you're like, all right, cool. Let me pay attention to what's going on. Um, what is the word for a reason why you get into multiple trades? What is the word? A lot of people falling off this call. Gonna be the ones who stayed on who really know what they're looking at. Confluence. Stop playing with it. Confluence is the reason is when you find multiple reasons to get into a trade. You should never get into a trade just off of one reason. Just because it's off resistance doesn't mean sell. Just because it's at support doesn't mean buy. You wait for price action. So the first reason why I would look at a sell is because it didn't create a new high. Then, if you look, what pattern did it just form? What is that? Put it in the chat. Double top. I don't know. I honestly don't know if like y'all are not listening to me, but I never said I trade off the daily, my guy. Um, to answer your question about the daily, I start with the higher time frames and move down. I'm not even on the daily now. I'm on the 4 hour, but I go down and I trade off the 1 hour chart. Wasn't trying to be slow. Yeah, double. Wait, no, this one's a double top. That's a double top for sure. It's a double top. People call it an M. All right, so if you place your Fibonacci primary trading chart, you're gonna have to take your mic off mute and ask that one more in depth. I'm not really sure what you mean.
So like say you're doing a top down analysis, but like you say you trade off the 1 hour. So do you only place your fib on the 1 hour, or do you do it on all time frames?
Oh, I told you, I remember I do it on the 4 hour. That's why I'm still on the 4 hour now because I didn't change off of it. I do my fib on the 4 hour because I'm trying to find the bigger move. I found my entry on the 1 hour. I don't,
Uh,
yeah, I don't
okay,
trade off the 1 hour. I found my entries off the 1 hour. You should trade off every time frame.
I got you.
Bet. So yeah, we got two reasons to get into a sale now. One reason, Bow then form a new high. Second reason, Bow formed a double top, which is an indication of a sale, right? So then, remember, we still right here. We don't have a reason to get out of our buy just yet. We have no reason to. No lows were broken. But say it drops, retest. Now you're like, oh man, it might just do its thing. Then it drops, comes to your low, breaks it, and retests. That's when you will look to get out of that trade. Because once your low is broken, uh your whole downtrend could I mean your whole uptrend is broken. Once your low is broken, your uptrend is broken. And now you'll form a downtrend. Wow. Wow. Downtrend consists of the lower lows on lower highs. Lower low, lower low, lower low, lower low, lower high, lower high. All right, drop a one if you understand market structure more in depth now. All right. All right, cool. All right, let's continue. Um, Market structure is done. Let me check that out. I'm going through this little list. Um, yeah, your time frames are just what you're looking for, how many pips you're looking for. It depends. Higher time frames, you get a bit more pips. Lower time frames, lower pips. I went over retest. I can go over buy the orders like buy limits and everything like that, and then. So what about when the low is broken and it just goes long again? It happens. What about it though? What are you asking exactly? You can take your mic off of you, because it's kind of like a vague question. After the low is broken and it goes long again, you see, like if, like you said, if the low is broken like this, it retests, then it goes long again, then you wait and be like, okay, is it gonna create a new high? Wow, created a new high, retested, then you can be like, okay, we might just be in our uptrend again. But then we still waiting for this high to be broken, because if you get into this buy and it's just steady rejecting off this high, there's no point again in, because it might drop. Right? It might come up to here and you want to wait for this high to be broken. Retest, then you got a pattern that shows it's gonna buy, then you can enter. Wow. Alright. Now I'm explaining orders. Buy limit, sell limit, buy stop, sell stops. Alright. So alright, cool. So if I'm in this trade, well, if I'm looking at this trade and I see, alright, I see a reason that it's obviously it's not a reason it's gonna buy right now, but we're just gonna speak visually. Actually, let's do a sell. All right. Let's say we got a support right here. Make it big. Say we got a support right here, right? And we're like, if I think that it's gonna continue to sell, but only once it breaks that support, then I'll get into this trade, right? Because if you market executionist, remember this is trading. Usually only do orders when it's in a zone. So if you're trading and if you get into a sale, it could just bounce right off of here, right? Just bounce right off of that. So what you can do is place a sell stop, right? You can place a sell stop. So the sell stop is basically saying, all right, once it gets to this point right here, put me in the trade, right? So you're basically saying once it breaks that support and retests or something, and it continues to go down, then it could put me in a trade right here, like at 95831. That could be my sell stop, right? I'm saying that I'm not getting into this trade until it breaks the certain structures that I need it to be, whether it be a low or a support or a supply, a demand zone or something like that. I don't want to get into that trade until that happens. Let's see. Same thing for a buy stop. The price was coming up to here, and I'm like, man, I know once it breaks this, it's gonna shoot up, but it has to break this first, because if you get into a buy and it just hits this, it can just drop, right? It can just drop right back down. So you don't want to get into that buy and it's just coming right up to here. You want to put that buy stop up here above the resistance that you want to break first. Because once it breaks that, wow, then it gets to right here where you put the buy stop, it'll put you in the trade and then it'll take off. Very, very simple. Buy limits or sell limits are basically you guessing when it's gonna reverse, so to say, right? So, so by making this as simple as possible, your buy limit is basically saying once it gets to a certain support, it's gonna buy. That's all the buy limit and limits are. So you're saying when it gets to the support, it's probably gonna buy off of that. So in visual terms, you're saying once it gets to here and you set your buy limit for this support, if it does what you think it is, It's gonna put you in right here and then buy, right? Sell limits are the exact opposite. If say you think that's gonna come to here before it drops, right? You'll place a sell limit right here. So when it gets here, it'll put you in and then it'll drop. Super simple. Super simple. I'm gonna drop it in every single chat that I'm in after the call. Um, but that's literally the whole list of what I was going over. I can go over like just in terms of risk management, like just make sure you're not risking your whole account for one trade. Like it's very, very asinine for you to risk your whole account off one trade. Like you're trying to triple your account off of one trade. It happens, but don't assume it will. Use every trade like you're trying to compound it. Real traders who real life have hundreds of thousands in their account, they built their account slowly over time. Or they had a lot of capital to put in. A lot of us don't have a lot of capital to put in. That's why the residuals help. That's why the residuals help to give you that capital. Now I'm chairman. I can have $3,500 every week come in. I can put that in my trading account. I can put 15 in my trading account. I couldn't do that before, right? You gotta put yourself in a position, even hit P600. Wow, that cool little 150 can help you put money in your account instead of your hard-earned money from your job, right? Um, so in terms of risk management, if you have $100 in your account, right, and your stop loss, all right, let's just look at this. Oh, and by the way, that GJ that I told you I was gonna drop. Let's see what it did. It dropped a little bit. What's that, GJ? No, I was on GN. I was on GN for sure. Look what it's doing. Told y'all it was gonna drop off here at the beginning of the call. Literally. Told y'all what it's forming. Even star, drop. How many pips is that since then? Cool little 22 pips. Just because I already had everything marked up, I can tell by looking at the candles, I know price action. And I know that's gonna come to here at least. Right? So say you got $100 in your account, right? Say you put a buy limit right here. You saying when it gets here, it's gonna buy up. Which I don't think is gonna happen. But say when it gets right here, it's gonna buy up. And this is your entry. You only want to put your stop loss about 30 pips away. You don't want to risk too much, and your TPs to end up making you more money than your loss should. That's another reason why I don't enter 15 pip TPs with 30 pip stop losses into my account. So say I'm in this trade, I get into this buy, right? This is my TP. What is that? 70 pips away. That's my stop loss, 30 pips away. Looking at it right here, 30 pips. I need to learn how to count pips too. I'll end the call with pips. But say you get into this buy, right? Got $100 in your account and you're risking 30 pips. If you only want to risk $10 out your account, which y'all should only be trying to risk 15 at the top. Say you want to risk $15 out your account. Got 100, you're willing to risk 15 off of one trade, which you should never do. But say you're willing to risk 15 off one trade. What you would do if your stop loss is 30 pips away, you're gonna be like, all right, in order for me to only risk $15 with a 30 pip stop loss, I'm gonna need a 0.05 lot size. Cause I know 50 cents goes in 50 cents times 30 is $15. Don't ask me how I'm just if you know math, you know 15. If you got 30 pips, you got a 0.05, that's $15. So when you're looking at these trades, when you get them from a signal, you want to be able to check your account, check how many pips away it is, right? And utilize that by knowing, all right, cool, I only want to risk this much on my account because a lot of times people are just, oh, snap, new trade, bow, put it in, $2 per pip, 150 in their account. The stop loss might have been 60 pips away. You didn't even peep. And now you just lost 60 pips on a $2 lot size. That's 120 out your $150 account when you went to sleep and you blame it on the signal person. No, No, it's your fault. Because I guarantee you somebody else who had that $150 account only did a .05 and they only lost 30 pips. They only lost $30 out their 150 while you lost 120. Because they were being more smart. Alright. So make sure y'all are all are doing that stuff because it's gonna mess you up. You everything that I just taught you, that's how you know what's gonna happen next. Like it's nothing else. You can't just guess. It's all about doing analysis. I'm gonna end the call with how to count pips better. Alright. So if you look, most of the pairs are set up with 1 point and then 5 digits. That last one is your pipette. It's really extra information, but just listen to what I'm about to say and make it easy as possible. So every time this number before the last column changes, it's a pip. Alright. Every time this number, just this one, don't think anything else, just this number changes, it's a pip. So if I'm on 70003, I'm looking at the zero right now. When that changes, it's a pip. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So okay. So from 97000 to 97100, that's 10 pips. Now you want to look at how it moves within each pip increment. So if I know from all zeros to 100 is 10 pips, then I could think, if we're going from 0 to 100, that's 100 points, right? 0 to 100, 100 points, 0 to 200, or from 100 to 200 is 100 points, or from 100 to 300, that's 200 points. This is how you count on regular numbers. Every 10 points is 1 pip. Say it again. Every 10 is 1 pip. So if I'm going from 100 to 200, and that's 100 points, and I know every 10 points is a pip, I divide 100 by 10, and that's 10. If I'm going from 100 to 300, and I know every 10 points is a pip, I'm dividing 200 by 10. It's 20 pips. All right. You should be able to look. Oh, 96781 to 96790. That's 1 pip. Just moved one time. All right. That moved one time. Or if I went from 96647, when that 4 changes, it's a pip. Pip, 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 pip. It's the same for everything else. You go to gold. This one is the only one that's a little different. Every time this number changes, it's 10 pips. So from 88 to 90, that's 20 pips. 88 to 89, 10 pips. From 90 to 92, it's 2 pips. From 1480 to 1484, that's 40 pips. Very simple. 1486 to 1493. Oh, 86 plus 93. That's what's that? 70. I mean, that's 80. Oops. No, that's 70. I'm tripping. 86 to 93, that's 7, right? 7 pips. I mean, 70 pips. Just don't make it complicated, please. If you make it complicated, you're gonna be stressing yourself out and pulling hairs out your head. Promise you. Um, and GBP JP, well, actually USD JPY and GBP JPY are the same way. They have 3 digits and then 3 more. It's the exact same. The only difference is the decimal is moved. The way you count is the same. From 800 to 850, every 10 pips. I mean, every 10 points is a pip. Oh, from 0 to 50, that's 10. I mean, that's 50 points. Divide that by 10, that's 5. You won't have to keep doing the dividing and everything. You'll easily just get to knowing from certain points to certain points. Like I know from 107 200 to 107 600 is 500 pips, and it's 50 pips, and I can go from here to here and see. 50 pips. It's very simple. You just gotta keep practicing. Um, but that's basically it. I appreciate everybody who got on. This was like a 2 hour call, G. Was it 2 hours? I think so. Oh, it was an hour and some change, but it was a long time. So I appreciate everybody who stayed on. Drop a one in the chat. Drop some emojis. Drop some fire in the chat if you learned something new today. You learned something new today, drop something in the chat. I should really get 67 of them. It's 67 people on this call. 67 people on this call. Let me pay attention to who put something, because everybody else, y'all just playing. Y'all just here for the clout. I don't really want to learn. All right. I really take heed of names, I promise you. If you know, you know. Harold always like that, for sure. Yeah, Taylor. Cool. So a lot of y'all doing is the same, so I really need more than 67, but it's okay. I appreciate all of y'all. I'm gonna drop the link when it's done downloading. But let's get it, family.